I guess we are live. Okay. So, hello students and welcome back to bankexamstudy.com. My name is Ramandeep Singh and this is the 24th session number 24th. So, this is the 24th session for SEBI Grade A that we are doing, and today we are covering ESOPs and the buyback, right? So, let's start the session with question number 1. On 28th of October, it is on, not in. On 28th of October 2014, the SEBI, on 28th of October 2014, the SEBI replaced Section 11 of SEBI Act with the SEBI share-based employee benefit schemes, right? So what I'm going to ask is, it applies on which of the following mentioned schemes? So it applies on which of the following mentioned schemes? The Section 11 of SEBI Act 1992 is applicable on which of the following mentioned schemes? Okay, so is it employee stock option scheme, employee stock purchase schemes, the stock appreciation rights schemes, general employee benefit schemes, or all of above? So the Section 11 of SEBI Act, now a new regulation, SEBI share-based employee benefit regulation is here, and it is applicable to all of them. So the Section 11 is applicable. Please remember the Section 11 is replaced with the SEBI share-based employee benefit regulation 2014. So employee stock option, ESOPs. So what are ESOPs? Let me tell you what are ESOPs. See, students, in startups, even in big corporations, right? The companies provide the shares, provided shares to its employees, at discounted price, a price which is far lower than the market price. So that is an ESOP. So that's a general understanding that you should have. So which section of the Companies Act 2013 deals with the provision for issue of employee stock option schemes subject to compliance with the rules and regulation of SEBI? So the stock option, which section of SEBI, the Companies Act 2013, which section deals with the issue of employee stock options? So this section you should remember as well. Very, very important. It's very important to remember the section number here. It's D, section 62. Section 62 deals with the provisions, deals with provision for issue of stock option scheme subject to compliance with the rules and regulation of SEBI, rules and regulation of Companies Act 2013. Very important. So please remember, Section 11 replaced. Now Section 62 deals with the issue of ESOPs. The reason for which, why companies grant ESOPs, grant its employee the ESOPs. I already told you ESOPs, why ESOPs are provided, why the company would give its shares at a discounted price to the employees. The startups, they cannot, sometimes they cannot pay huge amount of money to the, huge salaries to the talent. So that's why they give part of their companies as an ESOP. Or to retain the employees, if the employees is a shareholder of a company, obviously he would love to be at the same company because he has shares of it. He is a part owner. To use it as an obligation granted to employees to accomplish to subscribe or purchase, like an obligation that happened in the PSU banks, that happened in case of PSU banks, that banks were facing cash crunch and the banks asked the employees to buy the shares, right? The ESOPs. And although, even the shares were issued at discount, still the employees are in losses. To use it as a tool for aligning the interest. See, if the aligning the interest of employee and the interest of business. The interest of business is long-term growth. So if the business is growing in the long run, its share value would increase. So that's what employee is looking for in case he has a lot of shares. So all all is actually, the A, B, and D is actually correct. The A, B, and D is actually correct. Usually A, B, and D is actually correct. Most of the time, actually, ESOP. What is an ESOP? ESOP, it is an option. Again, it is an option. It is an option, not a Not an obligation. It is an option, not an obligation. The word is wrong here. It is not an obligation. It is an option. When the PSU banks offered that ESOPs to its employees, that was an option. Okay, although they were forced, but that was an option. Okay, so an ESOP is always an option. It is up to the employee whether he wants to take the advantage of that or not. That's up to the employee. If there is any doubt, please ask your doubts in the super chat. I'm always there with you. Let's move on to the next question. And now it's your turn to answer the questions. Okay, so it's your turn to answer the question. If you can answer the question, that's really great. So let me check if always an oops, sorry. So please ask your doubts in the super chat. Okay, so hello everybody. Hello Shivam. So let's move on to the next question. Make a correct match. So what is grant, what is vesting right, vesting period, what is exercise period, and what is option? So as I already told you, the ESOP is an option. So just give it a look. The company grants the grant given by the employer on the paper. The company give an option to the employee to make use of ESOPs. Vesting period is a waiting period. Waiting period between the grant time and the exercise period. Exercise period means when the option is actually used. The used option used. So vesting period is a waiting period given to the employees. So that's what it is. The grant is the option to employees to use that option, the ESOPs option. Vesting period is the time period given to the employees. Exercise period, the time period after which vesting that employees are making use of the option or the rejected. Option is a right but not an obligation. Okay, so that's it. The keyword is important. Right but not an obligation. Under Companies Act 2013, what shall be the minimum years gap between grant of option and vesting option? Very, very important. So that period, the grant of option and the exercise period, what should be the minimum vesting period? What should be the minimum vesting period? Very, very important question. What is the minimum? Vesting period. Somebody is asking me, hi sir, there is any live class and paid course of SEBI? See students, these live classes, these are actually available for free. The content videos, the lectures that I am providing, these are part of the paid course. The test series, the descriptive paper evaluation service, or the chapters that I'm teaching, those are parts of the full course. Somebody is asking me, so I thought why not to tell. Shubham Sonkar, very good Shubham. The correct answer is 1 year. Okay, the correct answer is 1 year. There should be 1 year gap. There should be 1 year gap between the grant of option and the vesting option is imperative. So the vesting period of 1 year, the minimum gap between the grant of option and the vesting of option. So 1 year of time period is should be given to the employees. Very, very good. As per accounting, the employee share based payment plans are classified as equity settled, liquidity settled, employee share based payment plans with cash alternative, both A, B, or A, B, or C. So as per accounting, employees share based payment plans are classified under what? So the correct answer, if you know the correct answer, let me know. As per accounting, employees share based, I'm just looking in the option. If you know the correct answer anyway, you can tell me the correct answer anytime. Okay, anybody from the student side? Yes, yeah, somebody is asking me what is the difference between the paid course and the free course. I already told you there will be I'll be providing the interview preparation guidance as well. So let's get back to question number 6. What is an equity settled? Under this plan, employee receives shares. Under this plan, the employee receives shares. Okay, shares of company. Under the liquidity settled plan, under this plan, the employees received cash on the value of company shares. Under the liquidity, the employee receives cash. So employee share based payment plan with cash alternative. Under this, the employee, either the company or the employee has choice whether, so there is a choice between cash and share. So there is a, so as per accounting, employee share based payment plan can be all of them. Okay, or ABC are the correct answer. Who among the following are eligible for employee stock option schemes? Who among the following? See students, I have already taught you about independent directors and promoters, right? So no extra benefit to be provided to directly or indirectly to the independent directors, because that would, independent directors are sort of whistleblowers. If there is wrong happening in the company, they are sort of whistleblowers, right? So if the whistleblowers are given ESOPs, right, or they are that would be a sort of bribe. So except independent directors, permanent employees and the directors and officers, obviously they can receive the ESOPs. So why not independent directors? I already told you. X was granted ESOPs at an exercise price of rupees 1000 per option. Fair market value at the date of vesting is 4500. Market value at the time of exercise. At the time of exercise, I already told you what is the time of exercise or the date of vesting. So the value of ESOPs, what is the value of ESOPs? What is the value of ESOP? The ESOPs are calculated by the fair market value of the share on the date of exercise minus the exercise price actually paid by the employee. So it is 4000 rupees is the value of ESOP. The value of the share, the value, the exercise price rupees 1000, while the market price at that point of time was 5000 rupees. So that person actually made 4000 rupees. So that person actually, the employees were actually making 4000 rupees per share. Exercise price is actually considered, not the vesting price. A company shall maintain a register of ESOPs in which form? So I don't think most of you know about this. So the company shall maintain a register of ESOPs in SH6. In SH6, so I don't think most of you should know. It's not really important, but I should do it. So SH6 is the correct answer. Whose approval is compulsory before offering any ESOP to employees of private company, unlisted private company, by passing an ordinary resolution? Okay, so by private, resolution, I already discussed the private and the special resolution in my paid course. So shareholder approval is required before offering any employee stock option to the employees of the private company by passing an ordinary resolution. Okay. So that's all for today, students. I hope you like the way I teach. So you can take the full course on bankexamstudy.com, in which I am providing the video classes for all the phases, which is available in a very systematic manner. The complete coverage is provided to the syllabus. Test series is part of the course. The notes are available in the downloadable and the print friendly format, and descriptive paper evaluation is also provided. So we got 9 final selection in SEBI grade A 2018 out of 47 students, and you can just join the course on bankexamstudy.com. So this is a list of students who used the study material and they cracked their final exams. I'm really happy for them. So all these students, they just reach their career goals. I'm really happy for them. So that's all for today, students. Thank you and have a very nice day. If there is any doubt regarding the courses, you can actually WhatsApp me anytime, 906720100. That is my personal WhatsApp number. You can always WhatsApp me. Okay, so I have a Telegram channel as well. You can follow me on Telegram. My Telegram channel name is Bank Exams Today. Bank Exams Today. So that is my Telegram channel name. So that's all for today, students. I hope you like the today's session. Please like the video and subscribe the channel. That's all for today, students. Thank you and have a very nice day. Good night.